The chickens have come home to roost for Rio Tinto. It's taken a $9 billion write-down on its misguided purchase of aluminium giant Alcan 5 years ago, which has slashed full-year earnings by 60%. It's an embarrassment for Rio, coming just a day after BHP Billiton's record result. Well, I'm joined in the studio now by Andrew Robertson, our chief reporter. And Andrew, that write-down has cast a huge shadow on what was otherwise a pretty solid operating performance.
Well, it certainly has, Ticky. It meant that the net profit, the money available to shareholders, was down to about $6 billion, which is more like a big bank than a big miner. If you strip out, though, that $9 billion write-down, the actual underlying profit was actually up 11% to $15.5 billion. But if you drill down into that number, you see that all the profit growth came from just one commodity, which was iron ore, which has had a bumper year in both price and volume. Look at the other divisions, aluminium, copper, energy and diamonds and minerals. They all saw net earnings fall. The big talking point, of course, is that write-down. Rio was one of the many companies that got seduced by easy credit and rising markets in the years leading up to the GFC. And in 2007, it paid $38 billion for the Canadian aluminium giant Alcan, a decision that quickly almost brought the company to its knees with that huge debt burden it carried into the GFC. As well as that huge write-down, though, Rio has also announced tonight that it's continuing to cull its aluminium assets.
$9 billion shareholders' funds down the gurgler, basically. What did the company have to say about it?
Well, Tom Albanese described that tonight as a story from the past, which I'm very unhappy about. He'd actually only been in the job 2 months when he made that ill-timed purchase. He says he has to take responsibility because, as he said, he owned it. It happened on his watch. And he says both himself and his chief financial officer, Guy Elliott, won't be accepting bonuses this year. But to sweeten it for shareholders, the company's dividend is being increased by 34% to $1.45.
Tom Albanese did take a big swipe at the Fair Work Act tonight. I mean, he's had a bit of grief with unions up in the Pilbara that got back into the Pilbara.
Well, they're actually taking that case all the way to the High Court to try to stop unions getting a foothold in the Pilbara. Mr Albanese said today that he thinks Australia is now a country where costs are rising but productivity is falling, and all these massive wages being paid in the Pilbara. He said productivity needs to rise with those wages. He went on to say that the Fair Work Act must focus on what he said is the principles of engagement between employers and their workers. And he added that 5 years ago he thought Australia was one of the cheapest countries in the world in which to operate. Now he says it's one of the dearest.
And that compares to Marius Kloppers, of course, yesterday saying that Australia remains a gold standard country. So it's an interesting comparison there. But Andrew Robson, thank you very much for joining us.
Thanks, Ticky.